Okay, good morning, everyone. Thank you for participating in today's trading game. Today is Thursday, April 30th, final day. We got a little window dressing perhaps today, being that the last day of the month. We shall see. NFA compliance rule 2-29C subparagraph 1. You know it, love it, live it. Past performance not indicative of future results, and all that good stuff. So that fulfills the obligation for the regulators. They're probably listening in. So that has been fulfilled. Good morning, John South. We're calling John Mitchell S latitude 39. We're calling him John South now. We got a couple Johns in the room, so we don't want to mix them up. All right. By the way, John South, I do need to get together with you. So let me see if we can carve out some time, perhaps during lunchtime today. All right, let's take a look at where we are and where we're going. Do we know where we're going? We'll see. All right. Yesterday was a cycle day one, and it was kind of a little bit of a ride, but nonetheless, we had some halfway decent action. Of course, the Fed yesterday, that was Jay Powell's final act. All right. Established this. Oop, I want to change the color here of my little thing here. You'll never see that one. All right, so we established, oh, come on, David. There we go. We established a cycle day one here at the 31 25s early in the day. Then we ended up getting a rally. All right, again, the final J Powell rally. And then we had a little pullback here into the close. So overnight, kind of one of the scenarios here for a cycle two. Typically, we look for kind of an MATD rhythm, right? Market a morning after trend day. Um, we had a move up yesterday, but I wouldn't necessarily establish it as a, kind of a true trend day, right? Because, if you take a look at, let me just switch the charts here for a moment. Let's go over to this chart. And this is what I posted last night for today's daily trade strategy. So this is a multi-day composite profile, and all this does essentially is merge a number of different profiles. This is all on the daily RTH session only. You can do it on the full session if you want as well, but um, since the majority of institutional trade activity occurs during the RTH session, I tend to look at the composite profiles uh, during the RTH session. All right. Anyways, that's because bottom line there is because that's where the heaviest amount of institutional activity is taking place. All right. But clearly, we do look at the overnight action as well to see what's happening pre-opening and all that, and how things occurred overnight, because there is, potentially news events and so forth geopolitically that can affect price. But in terms of kind of core structure, the RTH session still is the big daddy. Okay. So you can see here over a course of, the multi-day period, we've been kind of in this rotational range, and for the most part, right? I mean, it's a rather, normalized distribution, that D-shaped, delta-shaped profile. So, yes, a lot of activity, a lot of range, a lot of opportunity, but for the most part, when you kind of take the 30,000 foot viewpoint, what has been happening? Basically, the market's been consolidating, right? At or near to the highs, all-time highs, right? So that continues to be a bullish scenario where the market's not really giving it up. It's, it's the old, BT, right? FD, okay, opportunities that the big boys are looking at, right? That doesn't mean we can't have short plays intraday, but when the market gets dislocated, obviously further to the downside, then there's, the buying, the dip buyers, step in. All right, so zooming back in over in our 60-minute chart here overnight, right? We had, again, one of the scenarios that you want to kind of think about as well. When I say, an MATD, I don't necessarily mean it's going to be in this narrow channel of consolidation. That's not what it implies at all, right? Markets can consolidate or be in this balancing phase and rotate through the entire range. All right, I call those range runners, right? So this would be kind of a range runner type scenario. Are they predictive? Not really, but they are identifiable, right? And kind of some of the implications of that, right? I'm not going to ever be able to, predict in any way that market's going to be a range runner, but I can identify some of the characteristics, of them. And again, even if you identify characteristics, what's the primary goal no matter what? What's the primary directive? Stay in alignment with the dominant direction, dominant force. All right. So, anyways, yesterday we had our, Fed move up, kind of a typical Fed move up. And then, of course, overnight here came back down and essentially retested, okay, the cycle day one low. Now, a lot of times that's a kind of a normal play for a cycle day two is to retest, right, the cycle day one low to make sure, because based upon cycle dynamics, we're looking for that cycle day one low, okay, to hold as kind of a launching pad for a rally. All right, so that happened overnight, somewheres around 3 a.m., 2:33 a.m. this early this morning. Also, of course, you can also kind of reference it. It held the prior close. Okay, and so now the rest of the overnight, now we've rallied back up. So this is kind of, again, what I call, right, let me just write it out here for the recap, for the replay, right? I just call this a range runner day. So what's the implication of a range runner day? Anybody? Right? Just some wider range volatility, all right? That's all, right? But when you kind of think about it, we're still in the context. This is a 5-day profile here, still in the context of this range being built out. Okay. Uh, for the real primary bullish case, what's price need to do here? What will the bulls need to do? They need to get above, right? Again, these highs, right? 72.20-ish plus or minus. Okay, so we know that's for a continued extended move, right? Given that it's a cycle day two, what would be the kind of the normal expectation? Perhaps some rotation, back down, inside yesterday's range and yesterday and overnight range. Okay. What else do we have? Can we identify? Right. Currently, the price is within the D level money box zone. Okay, we're up at the cycle day two penetration target right over here at the 06s. And if you read the daily trade strategy, which I posted up there for everybody, which was written last night about 7:30, 8 o'clock, I outlined the potential for various targets up and down. And oddly enough, both of them got filled. Okay, so, okay, great. Bragging rights. Thank you very much. But outside of that, it's not worth much. All right. So what do we got for today? So cycle day two, and again, given kind of the overnight, wide range volatility, also sometimes what you can get from the overnight activity is that kind of bleeds over, into the RTH session. So that doesn't mean we're going to have a wild range runner day. Clearly, that's not, necessarily going to be the read through, but we certainly can anticipate, given the rhythms from the overnight, potentially those to continue. It would be very odd for price to have this type of range rhythm during the overnight, and all of a sudden, the RTA session is like this narrow compressed range. Could happen, but it would be kind of an oddity for that to unfold. So the kind of the normal at this point, the normal expectation would be some sort of, kind of rhythmic activity, throughout. And either way, whatever unfolds, what's the primary directive? And what is the primary directive forever and a day? You know it. Stay in alignment, be flexible, pullbacks, stackers, all the good stuff that we do on a day-to-day basis. All right, that's it. Anybody have any questions, comments? Want to get in tune here. Again, it is since it's the last final day of the month, there is the potential for some a little window dressing. We had a lot of the mags earnings last night. You saw them. Again, caused some of that overnight activity. All right, we'll see how that bleeds through for today's session. I don't know if there's anything big on the calendar today. Didn't actually review the calendar. What do we had? GDP this morning. We had core PCE that was already done. We have Chicago PMI. That would be the next event here at 9:45. All right, that's a skinny on the mini. Let's see what we have for today. Be patient. Again, if you're looking for longs, back down towards the VWAP 810 zone would be of interest. And of course, extended moves would be above this D-level money box zone. And of course, the D-level money box zone is an active valid zone. So if you're looking for a D-level money box play, that would be a reversion back lower. That's also definitely a play. Oh crap. Ah, all right. All right, let's see if Mr. Market is good to us today. Again, if you're looking for a long down there towards the A10 zone coming into play right now. If you're playing short off the D-level money box, that would be an area for profit, take profit. And we're expecting some range activity. All right, keep it light, keep it flexible, and let's see if Mr. Market can pay us again today. Oop, off the screen. Again, expecting snappy, trappy type action, right? DL, yeah, DLM, blah, blah. The D level money box pays. Yeah. Surprise, surprise, surprise. D level money box pays. All right, let's see if this A10 here can hold and give us a little bit of a payday here. I don't want this to, if you're long, I don't want this to stay here too long. I want those buyers to respond briskly. It's brisk, baby. All right, come on, get up there. You don't want this hanging out too long here. It's at risk of rolling over quickly. Back down to VWAP. Yeah. You're in great shape on the short side. If you're playing the A10 long, not so good at this stage. You can see where it comes down to this area and it doesn't respond quickly. When that happens, like you're seeing right now, right, there's risk for further downside. You want an area or a level to respond very briskly. The sellers to dry up quickly if you're looking for a long, that is, right? If not, it's going to rotate lower, which is what it's doing. Yep, there it is. All right, you see that pattern? Something to be aware of, right? It comes down, hits an area. You want that if you're looking for a long off the A10 here, you want this to respond quickly. If it doesn't and it stays here, that means that it's going to make another leg lower. So when you're playing an area, you want it to respond very quickly and not and if you're long against that or if you're a trade against that, you know, you may want to tighten up your stop and just say, you know what, I'm out of bounds here. You know, so something to kind of keep in mind. All right, so looking for that rotational action, all right, back into range as we briefed. And again, coming off that, you know, this is on a cycle day two, by the way, this is a good, you know, in this kind of rhythm, this is a good D-level money box play. Okay, this is a good D-level money box play. All right, so rotational shift, right? Again, you know the premise, right? Rotational shift, now to the short side, or if you're still on the short from the D level money box, all right? Now, given that type of rhythm, coming into today, this kind of rotational range runner type stuff, right? Again, be sure you're on the correct side with momentum. Just trying to, buy into a level, okay? Um, looking for that reversal could be pretty challenging today. All right, so all right, what do I need to do here? What was that one? Yeah, I'm sorry. Hold on a second. Let me extend that out. Actually, let me do this. Um, Crude oil is done, right? Okay, so let me move the ES over here and let me extend the charts. Hold on a sec. All right, is that better? Okay, that should be better on the opening range charts. Okay, just kind of move them around. Yeah, I can't get rid of the previous day's signals, so I have to kind of clear them off that way. Clean them up a little bit. All right, that should be okay. Thank you. All right, you're good for now. Yeah. Oops. Yep. Okay, there you go. All right, that's the opening range charts. A little bit clearer view. All right, so looks like we just got about a retrace of about 50 back, right, from the high-low extension, high-low range overnight, coming off that money box, D-level money box. You guys starting to like the D-level money box plays? I mean, nobody has that. I mean, yes, people can do the, look above, look below, and fail and whatnot, but before there was ever a term look below, above, look below, and fail, um, we had these D-level money boxes, like 15 years ago, and having learned all about those when I was a market maker's assistant, and they still work to this day. So you can have your ICT concepts all you want. We were D-level money box was before an ICT, Mike Huddleston. Okay, we'll take that bragging right. All right, let's go back here. We got an A10 on deck. Okay, now again, the type of rhythms we saw overnight tend to bleed into the next day. Are we seeing that type of kind of rhythms here today already? Yes, we are. So make note of that. Many times as the market goes during the overnight, it tends to roll into the RTH session, those same rhythms. Like I said, it would be very, very odd for the market to go into some narrow range trade given the overnight wide range activity. All right, the A10 here, again, playing out. All right, so just stay flexible today. You know the deal. All right. Again, the type of rhythms that we're having, it's these are the type of rhythms that you would want to be passive, aggressive, right? So passive aggressive. All right, so back at the VWAP there, we'll just be patient for the next clean setup. Let me see what time I got here. Hold on a second, everybody. Gotta help Nicholas here get into the room. 1 second. Um, there we go. Let's forward. Okay. We'll see if we can get Nicholas here in the room. Nicholas is a new member, but he's not in the room yet. So, uh, all right. So just take it one decision at a time. All right. As the day unfolds here, and again, that's how we need to do this, anyways. Right. Always taking one decision at a time. So, what is the current lean at this stage? Okay, regardless of whether we have range and what's going to happen later on and so forth, what's the current lean? Always ask yourself constant. It's kind of that, it's a looping question, right? What's the lean? What type, where are the key levels? If you've not written any of these questions down in a checklist, I highly recommend doing so. Okay, be sure that you know the type of questions to ask on a consistent basis. Right, that is the OODA loop, right? Observation, orientation, decision, action. So the observation orientation, there's questions there that pertain to observing and orientating. Ask those questions, repeat those questions, drill those questions in your head so you're dreaming about them at night. When you get to the decision action cycle, another set of questions, drill those in your head. Right? What's the current lean? Right? Where are the ATRs? What's, you know, again, a number of different questions. So kind of create a little short checklist for yourself. All that's designed to do is to keep you focused, okay, uh, during the chaotic action. If you've ever learned, which you probably all have, right? Uh, what's the idea of a fire drill? Do you have complex decision making that is unfolding during a fire drill? Anybody? No. There's no complex decision making in a fire drill, right? You have a short burst set of actions that you need to take in a fire drill. You know why you only need just one or two decisions and actions to take? Because you'll never remember anything more complex beyond that. Why? Because your fight or flight response is going to be activated in your head. Okay? And when your fight or flight response is activated in your head, you will not be able to make any further decisions except for what you would learned and practiced in a fire drill. Okay? So what does that mean for us in trading? It means once you've done your observation orientation in a slower routine, okay, when you get to the decision action cycle, you have to reduce the amount of decisions and narrow it down to literally one or two, best to have only one. Okay? Because in the heat of the moment when the market is moving very quickly, I guarantee you will not remember anything more complex than what you need to do. Right? So again, the observation orientation section, part of the OODA loop decision model, is a slower process. So you can, think of that bicycle wheel, right? Spinning slower. So you're observing, you're orientating, right? And now you say, okay, what's the lean? What am I looking for? You're drilling it down into the decision action cycle. In that decision action cycle, there's no more complex thinking. It has to be immediate. I see a signal, bam, take it. Know what to do, know where your stop's going to be, where your take profit's going to be. Because beyond that, if you're trying to analyze, should I take it or should I not, that's the complex decision making. And what's going to happen is your inner critic amygdala, is going to go nuts and is going to prevent you from taking a trade that you probably should take because you have too much of a complex. So it's like being in a fire, like which way do I go? Which way do I go? What do I do? No, you need to have all that stuff done well in advance. So think about trading as somewhat as like a fire drill when it comes to taking the trade. John says, I went I went through a real life fire drill start of the week. The bloke next door uh, hit hit the condo. Lit the condo on fire under the influence of drugs and alcohol. Yeah, so you had to be ready, right? So the friggin' bloke next door, right? And that's the thing. See, the thing is, you don't know, particularly if you're living in a condo, unit, right? An apartment unit. You're living with people you have no idea what's going to happen, right? Just as John's saying, it's different if you're living in your own house and you're very careful and whatnot. The risk of something like that happening is relatively low, right? But if you're living in an apartment complex unit, condo unit, you're living with people you don't know. So you got to be ready, as John was, right? Went through a real life fire drill. So kind of think about trading the same way. This is the first time I've ever used this analogy, all right, with trading. But I think it's an appropriate one because it's that decision process that has to be, responsive, spontaneous, know exactly what you need to do under whatever the conditions, right? So you need to have that prepared. And if you don't, you may be finding yourself, um, freezing, freezing from making a decision. And in a fire situation, right, you cannot freeze. You need to know exactly what you're going to do, what your escape route is. So in trading, again, very similar. Sure, you don't have to take the trade. That's always an out, but that's not really what we want to do, is it? Right? Well, why even bother? We want to be in there. So you need to take the protective measures, to take the appropriate action at the appropriate time. You know. Yeah, John also says I've been through brush fires, right? But that smoke had to get, through, was thick. Yeah. So another thing, again, I'm not going to talk about, fire responsiveness, but, stay low, because that's where, better air is going to be. So, I mean, again, need to know these things. So you learn all those things well in advance and you practice them and you understand them and you process them slowly. But when it comes time to act on those, you better know exactly what you're going to do and how you're going to do it. And again, very similar to trading. So I hope that's a good analogy. You know, I think it's a good one, something new for me. Yeah, what we were taught in school, stay low and go, go, go. Right? Yeah. So, a little kind of rhyme there, right? Stay low and go, go, go. You remember those. Create something like that in trading. Something that rhymes, something that you remember. Know the conditions that you're going to trade under. All right, so we're back into, so we're just, we're into these cycle day two rhythms, right? So we are getting some sort of a balancing type action here. Let's continue to frame it out, right? What's our current kind of sandbox area? 7160. Today's line in the sand, 7175. So basically we're within the context there, right? What's the high volume node right now? Ladies and gentlemen, 7175. But how did you know? It's magic. It's magic. Do you believe in magic? All right, so again, just continue to ask the various questions, right? What would the bulls need to do if you're bullish? What would the bears need to do if you're bearish and playing that side? You'll get the answers, you'll know the answers through continuous looping of questions. All right, let me know if you have any questions or anything. We're just kind of in this quiet back and forth here now. All right, so nothing more really to talk about. Again, the lean right now, all right, active lean here, and it is 10:15 a.m. Does favor, selling bounces since price is currently below Whopper. Okay, this is which is right around the 77, so 75 line in sand, 77 Whopper. All right, 810 just above it. All right, so again, the lean there, right, favors selling bounces until what? Until price can reclaim back above 75, 77 zone, would you say? All right. So that's again, that's the observation orientation, right? Part of the OTA loop. Just observe what's happening, outline the levels. Remember what we call our sandbox, so outline some sort of a sandbox, right? And that's the slow portion of the decision process. Just, slow and steady, right? Then when you get into the decision action cycle, that's the one that that bicycle wheel, the decision process, right, has to be speeding up, right? What setups am I looking for? Is the structure there? Again, asking number of different questions related to that, right? Coming up with an answer and so forth. All right, so. But for my commentaries right now, I'm just gonna come off the air for a few minutes. There's just not a whole lot to jibber jab about here. Again, cycle day two, rhythmic, action, balancing type trade. Let me know if you have any questions, and I'll be happy to respond to them. So for now, just going to keep it low, keep it quiet until there's something worthwhile to jump on. I may cut the stream off a little bit soon today, perhaps maybe here at 10:30 if the current rhythms persist. Not much to glean sitting through quiet consolidation. But again, if you want to play kind of the lower edges and stuff, so you take a look at the pivots here, right? This one kind of dipped below. Not really I don't know. I wouldn't really consider that look below and fail, but maybe technically it is. But if it pops below a level, okay, so there's kind of two ways to think about this. Maybe there's more, but just consider two ways. What would be the ways to consider it, to think about it, right? Breakdown. Maybe not number one, but a breakdown. That would be one approach, right? So breaking through a level, a breakdown. Of course, what's the second level? A PKB. Everybody knows what a PKB is. If not, go into the glossary, right? So look below, right? Reversal back. right? So then take it a step further for each of these, okay? Take it a step further. Well, what would you need? Again, notice the term, what? What would you need to see if it was a breakdown? Okay? What would you need to see if it's a PKB? Okay? All right? So that would be when you're framing it out, and do the same thing, again to the upside, right? Pivot level. So frame it out and then ask questions. What would I need to see structurally as price unfolds, right? For a move, a reversal move or something to the upside. That's where when we talk about outlining questions, should lead you to some answers. Okay. Good morning, Mark. Mark, is the volume good for you today again? Have we solved that issue? Hopefully we have. All right, so again, think about these type of questions. That's where it all comes together. If you don't know what questions to ask, you really basically lost. You're just going to be kind of always behind the curve, chasing ghosts. Oh, we did fix it, Mark. Oh, excellent, great. Honestly, I don't know what I did, but I do think it was probably I was using the aux mic initially, and then which I had up to 100, and then I just also added in the desktop, which I guess that was the fix. I thought the aux mic was just the only way, but as long as it's fixed. So let's take a look at the kind of the internals here, right? I don't know. Oh, wait a minute. It's the wrong one. Huh? No wonder. Okay. So we do have some bond, again, the internals here do show positive ADR, positive uh, NICE at the moment, but yeah, take a look at FinViz. What are the groups here? Here we go. Yeah, so what Ram is saying, we get some rotation out of technology. But again, probably that's sell the earnings, right? Type of play. Okay, and so you can see here on the FinViz financial visualizations for the intraday, 1 day performance, which is today. You can see, again, technology obviously with the tech sector down, but everything else here is up, okay, or solid, right? So when you take a look at, you know, the advanced decline ratio, you take a look at the NYSE, New York Stock Exchange ticks, right? And you're looking at it and you're saying, huh, okay, we got a positive slope there on the NYSE. We got, essentially above zero line, right, on the NYSE there, right? Let's take a look at the cumulative one, right, on the NYSE. So cumulative on the NYSE today is all positive. You say, well, geez, how can that be? Well, this is how it could be. Remember, it's all the stocks, not just one group. So even though technology here is lagging, the rest of the market is making up for it. But what that does, because technology is such a heavily weighted, okay, because it's such heavily weighted in the S&P, that it's kind of creating this more two-sided range day. I mean, technology is really heavily weighted. John, Bailey, what's the current weighting in technology do you have? I know you have that the advanced decline sector uh, graph that you've made. Yeah, okay, thanks. 35%, a third of the entire S&P 500 is weighted to technology, right? So even though all the others, and financials not really participating to any degree here. So financial is also heavily weighted, right? But it's minor in terms of intraday performance. So then all the other sectors, right, have to make up or balance out what the negative of the technology is currently showing. So, when you look at just the NICE, and the advanced decline ratio, you're saying, okay, that's part of the picture. But if you take a look at, what groups are driving, now you get a little bit clearer picture of what's happening. Make sense? All right. Ah, thank you, John. There you go. There's the weightings for everybody. John's providing us. Let me put it up on the screen here. So information technology, 32%, financials 12. I mean, it's just think about this, right? Technology is even dwarfed, financials. I mean, that's how, I mean, you have to combine, think about this, right? 33%. So you have to combine financials, uh, consumer discretionary. So that would be another 10%. So 22%. Then you throw in, I don't know, I mean, industrials, right? So it would take financials, consumer discretionaries, and industrials, three different groups, to match one weighting of technology. So as the saying goes, right? So goes NASDAQ, so goes the market. That's why it's so important to be monitoring the NQ, whether you trade it or not, but you need to be monitoring it all the time without fail. All right. Yeah, we already had a reaction from value low. Is that the norm to look for? Sure, right? I mean, the question is, right, value high, value low. So you have a contingency of traders out there that trade value. Their whole methodology is trading value. So what they look for, right? So if you think about, right, the point of control, this is the highest. So again, 70% of the entire um, volume is contained within value, right? But of course, this is the highest volume node, the point of control, and then, right around that, okay, this kind of zone, right? And then as you get to the lower value or to the higher value, it's part of the value, but it's the lower end of value. So you can see how the volume kind of, tapers off, right? What does that mean, right? Well, as prices are coming down into the lower value area, and that's why I have a line here, by the way. I have an extended line that represents the lower value, right? So this is lower value, this is upper value, right? Those two lines. So the contingency of value traders out there is when price comes down into lower value, there if there is no buildup of volume, let me repeat that. If there's no buildup in volume, okay, the sellers are drying up. 'Cause who pushed it down? Again, ask the question. Who pushed it down to the value low? Sellers. So what's the aim of the sellers? Well, they just could be long and just liquidating some of their position, right? Just, okay, so I'm going to sell them down to that and I'm going to stop, right? No, like, net, I don't think of trading as like each side is like has a nefarious reason to do what they're doing. The market's moving. Oh, it's a nefarious reason. They're trying to do this and they're trying to do that. No, right? They just, hey, I got a long position. I want to liquidate part of the position. I'm going to sell it down to this area. Period. Right? Moving on to the next trade type of idea, right? But the idea then, is when prices come down into a value. Remember, this is where we have this kind of range condition here now. Know the context, right? So we have this range condition. So we're anticipating a rotational action, right? Up, down. Well, you can actually see this even better here on the volume ratio. Look at the volume ratio, right? It's rotating. You can even see this on even better on CCI, right? I mean, that's cyclic, right? Activity, not trend activity. Make sense? Do you see it clearly now? So when prices in terms of the value area, if you're referencing those people that are referencing value low, they're looking for a dip below and then a reclaim above. And that's the buy. Yeah, I'll call it your PKB. Again, it's kind of a PKB style, right? But this is what the, people that trade value, they're looking for, the value low, value high areas for reversionary trades, reversion to the mean in range conditions. That's the play. And it has been like that forever. And the interesting part about that, though, is that you actually can anticipate what others are more likely to be doing. Is that part of my playbook? Officially, let me see. Let me just double check. I haven't. Bum 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 bum. Mm, it's not officially as part of my playbook, but it can be part of anybody's playbook. But it's not officially part of my playbook. Well, let me just kind of it kind of it's for me it's in the PKB category, right? The peekaboo, look below, look above, fail reversal. It's in that category, but I don't I'm not categorizing it as a value high, value low play. I could, but it's essentially the same thing for me. So I don't think of it that way as value high, value low. But again, to your question about the value low or value high, all right, that's a way to play it. Okay. Again, anytime you have, let's kind of generically talk about this for a second versus, specifics. If you get the general concept of this stuff, then you can apply it in a more specific way to an individual condition, right? So particularly if you're in a range, if you're looking for the idea of a range is what we refer to as outside, inside. We're looking for a trade outside or at the edge of a range for a reversion back into the range. Okay, step number one, is that clear for everybody? All right, that's the core concept when we're in range. Then what we're looking for is we're looking for a particular level, identifiable level that we can use. Now again, those levels may change, but we can certainly use value high, value low as example. But we can also use, other levels. So in today's example or today's session, right? So again, we have value high, value low up here, value high as levels. What we're looking for is as it happened here, price to come down into that level, reverse back up. It's a PKB style trade. Okay. What else can we use? Again, this is the idea about identifying levels. And when I say levels, it could be many different types of levels. Okay, Mark, have a great rest of your day. Thanks. Appreciate that. Be sure to throw us a like. um, Other levels, a little bit more specific. Well, let's take a look at what we're showing on the screen here. How about the A10? That's a level, identifiable. If you want to trade the A10, there are different approaches to trade the A10. Again, you decide how you want to do that. You could sell it as it's coming up into the A10 with a limit order, right? Runs a little added risk if it just blows through, but if that's something you're accepting, nothing wrong with that. You can do what? Right side pivot rule. Okay, as they say, you make the call, right, of how you want to. I can't tell you what to do, right? I can give you options and then you decide how you want to play it, right? Um, so again, this could be in this today's session, you got VWAP over here too, right? Now again, the VWAP here is relatively flat, pretty flat. So first off, you got to understand what a flat VWAP is indicating. If you don't know, then you need to find out, right? But basically, it's indicating a flat range type rhythm, which is congruent with what the action is unfolding as, right? Okay, so you could use something like that, perhaps, as a reference to maybe take a trade. Again, you need to explore this stuff a bit further than what I'm saying now. Um, Pulling into an ATR area, you know, again, just as an example, even though you're in range, how would you want to play that? You need to understand and need to look at, various unfoldings of price action around those ATRs. If you, let's just say you're looking to play this one here, how would you play it? It's the how. Ask the question with a how, you're going to get an answer. So explore that. Could you buy it on a limit order, as we spoke of above on the A10? Yep. What else could you do? You could buy right side pivot rule, just as we saw in the A10. And by the way, you can do that to any level, right? Value low here, you can do limit order, you can do right side pivot, all right? Or again, you can always do market order. To me, those are your choices, right? I'm going to lay a limit order there, gets, for when price comes into that area, that level, or I'll wait for price to get into that area and I'll either, establish a right side pivot rule bid or offer, or if it gets to that area, I'm just going to smash the market order button. I know there's a lot of choices, right? But this is what you need to do. This is everybody here is different. You're not all going to be doing it the same way. I know that for a fact. You're not always going to do it for the same way. But these are some alternative ways of approaching these things. But the approach is what I'm trying to, express. It's a generic approach. And if you If you have that generic approach, then you can apply it to specific situations. Yeah, it looks like it did stop in reverse. There it is on the ES. There it is, Dr. Dean. All right, makes sense? Ram, I know I expanded on your question, but hopefully that helps for everybody. And now at some point the market will, find, its expansion phase. All right. What's also nice that why we're recording these things is now, you can all go back if you missed what I said, just review this morning's session. But remember, I'm only saving 5 days. So if you're going to review any of the sessions here, you got to be timely on your review. The ADD brain. When I was a young kid, I had well, they would today classify me of having, ADHD or ADD when I was a kid in school. The nuns, I went to Catholic school, so you know what that's about for those of you Catholics out there. And so the nun said I had ants in my pants, couldn't sit still. I was bored. I mean, yeah, I got it. Move on. You know, teach us something interesting. All right. Anything else? Any other questions? I'm gonna take a break. I'm gonna probably shut this stream down here. We got about an hour and 30 so minutes. Um, I think today's lesson regarding just approaching range conditions. And by the way, range conditions are prevalent most of the time. So it does make, some sense to build some sort of a competency skill set in understanding range, how to approach range. But remember, our approach here and how we do things, if you look at it generically, per our discussion today, you can apply it to any market. It's not like, oh, I have a special way of trading for range days in ES and a different one for trading range days in NQ, or if I'm trading gold or whatever instrument of choice, it's my own special way. No, they're all the same. Yeah, minor variations, but basically they're all the same. So if you learn the conceptual approach of how to trade, then you begin to apply it to a specific instrument and instance, you're going to go a lot longer, a lot farther. So something to keep in mind, right? And that's what I try to, with our methods here and so forth and our approach. You need to have a generic approach. So and the reason for that is you want to be able to, this is the benefit of that. The benefit is if you have a core generic approach, it's repeatable. We talked about that fire drill. You're going to do the same thing, right? As John said earlier, stay low and go, go, go. You need to have the same approach every single time. If you're trying to apply this approach to that approach to this approach, all the, multiple different approaches, which one do you use? See where the benefit can be? That's the idea. Such an easy concept, but very difficult to fully implement unless you've practiced and truly understand an approach. This is my approach. It works for me. Hopefully, it will work for you. But it is a standard approach. And, just a quick analogy to a standard approach, right? I'm an instrument rated pilot. I fly only for myself privately, right? I'm commercially rated, meaning that I can get paid. Doesn't mean that I know how to fly a 777, but I will say a 777 pilot and a private pilot, we all use the exact same air system. We all learn the exact same procedures, not something different for the Piper Cub crowd and for the Big Iron crowd. Nope, it's the exact same procedures. Instrument approaches, right? Way to handle takes off and landings and everywhere in between. Exactly the same. The only difference is what? I'm flying a Piper Cub, right? Versus, a big iron, 380 Emirates, plane. Okay? Yeah, that plane is more complex. So that pilot learns about the complexities and how to handle that airplane. But that same airplane and how they proceed is the exact same. They follow the exact same procedures that a Piper Cub guy does. They talk to the same controllers. Okay, so in terms of what we're doing here, if you standardize your approach, you can trade any instrument, anytime, anywhere. It's the exact same thing. It's not like, oh, I got a special thing for NQ or I get a special thing for ES. They're the exact. The approach, minor differences, similar to differences in a Piper Cub versus, you know, a 380, an A380, you know. Yeah, differences there, but we trade, but they use the same system. So hopefully that helps a little bit. We're going to cut it out here at about minute 38:40, and we will be back with you for Capital Preservation Friday tomorrow. So enjoy the rest of your day, and we'll see you then.